When it comes to long-term success in Forex trading, technical skills alone aren't enough. Mastering fundamental strategies is what really sets profitable traders apart. Today on FX Limit, we're breaking down the top 5 fundamental strategies that every serious trader should know if they want to stay ahead in the game. Let's start with number 1, interest rate differentials. This is the cornerstone of most fundamental analysis in Forex. Central banks use interest rates to control inflation and stimulate the economy. When a country raises its interest rate, it usually strengthens that currency because foreign investors seek higher returns. Smart traders compare the interest rates between two countries to predict future currency movements. If you're long-term trading, monitoring economic calendars and central bank announcements should become a habit. Number 2, GDP growth trends. A country's gross domestic product reflects its economic health. Strong GDP growth usually strengthens the currency, while weak growth can do the opposite. But it's not just about the numbers. It's also about expectations. If traders expect the GDP to rise and it falls short, the market reacts. This is where having a good read on market sentiment is key. Long-term traders often position themselves based on trends in GDP, aligning with currencies from expanding economies. Strategy number 3, political stability and economic policies. The Forex market doesn't like surprises. Elections, geopolitical tensions, or shifts in fiscal policy can cause major market reactions. Long-term traders should always keep an eye on the bigger picture. For example, trade wars, new regulations, or unstable governments can all create volatility. That's why many investors flock to safe haven currencies like the US dollar or the Swiss franc during uncertain times. Number 4, inflation data. Inflation affects everything from purchasing power to interest rate decisions. Central banks often react to inflation by adjusting interest rates, which in turn influences currency value. As a long-term trader, understanding how inflation impacts monetary policy can give you a significant edge. It's not just about the headline number. You need to understand the trend and what it means for future central bank action. And finally, number 5, trade and current account balances. This one is often overlooked but extremely powerful. A country with a trade surplus, meaning it exports more than it imports, tends to have a stronger currency. That's because foreign buyers need the local currency to pay for those exports. On the other hand, a large deficit can weigh down a currency over time. Long-term traders monitor these balances and adjust their positions based on a country's international competitiveness. Now, integrating all this fundamental data with the right tools can make a huge difference. That's where the Apex Trend Indicator from FX Limit comes in. It's designed to help traders align with the trend direction by scanning and analyzing market signals across different pairs and timeframes. You still make the decisions based on your fundamental insights, but the Apex Trend Indicator ensures that you're entering trades that align with the technical momentum. It's like having an assistant that double-checks if your fundamental setup has the trend on its side. It gives non-repainting buy and sell signals, shows clear entry and exit points, and even offers mobile alerts so you never miss an opportunity. Ideal for long-term traders who don't want to stare at charts all day, but still want high-quality execution. It's not about replacing your strategy, it's about enhancing it with clear visual confirmation and real-time data. So whether you're trading based on interest rates, GDP, or inflation data, make sure you're on the right side of the trend. That combination of solid fundamental analysis and smart technical tools is how pros play the long game in Forex. If you found this video helpful, hit the like button, subscribe to FX Limit, and check out the Apex Trend Indicator on fxlimit.com to take your trading to the next level. Thanks for watching, and we'll see you in the next one.